As we get deeper into our trading session, let's take a look at our grain market activity right up to the moment with our quotes provided by Bar Chart. Well, on the corn market today, we are 5 cents higher on the nearby July contract. That brings us up to 663 and a quarter this morning, and we have December now trading 8 and a quarter higher at 547 and a quarter. So the December is actually leading the way higher. That would be some bear spreading possibly taking place. Kind of the reverse of what we have seen for a few days. Now, on the soybean trade, we have the July contract climbing back to go just one tick higher, a quarter of a cent higher. We're at 15.38, and now it's a quarter of a cent lower, it figures. November now down a quarter of a cent at 13.69, so basically about steady on the day. And if you look at the wheat, well, we have the Chicago July down 3 at 6.76 and a quarter. If you look at Kansas City wheat, it has been under pressure today. We are currently down 6.5 cents at 6.27 and a quarter per bushel. Spring wheat trade in Minneapolis, we are down just one tick, a quarter of a cent lower at 6.97 and a quarter. In the cotton market today, we now have that July down 87 points at 82.05 cents per pound. December down 29. We were talking about the weekly export sales numbers. In case you just tuned in, corn had 4.34 million tons sold last week. And last week we sold 180,200 tons of soybeans. That was a pretty low number. Soy meal 267,000. Soy oil a negative 4,500. They had reductions. And the wheat 438,700 tons. Let's bring in Ted Seifried of Zaner Ag Hedge in Chicago and sort it all out here. So the market is trading higher in the corn market this morning after those big numbers, but it took a while to get going. Ted, how come?
Yeah, it sure did. We've had a big flush out from the highs. And at this point, you've got December corn really holding right where it should on a chart. Nice kind of reversal higher going on so far today. We'll see where we close. But, the parade of Chinese sales continue. And, another 1.23 million metric tons sold to China this morning. That brings the total up very close to 11 million metric tons over the course of the last 13 days. Wow. Now, the market seems to want to take that with a little bit of a grain of salt with the idea that, hey, they can cancel these later. I mean, it's a lot of time before those deliveries actually happen. But either way, it's been really impressive. Also weighing on the corn market is the idea that we're going to see a big increase in acres. There's been some numbers thrown around, 4 to 5 million acres included or above and beyond what the planting intentions number were. So that's kind of been a little bit of pressure. And you've got a corn market that's kind of trying to weigh the good versus the bad. The good being the Chinese sales, the bad being the idea of more acres and the possibility of improving weather in the longer term forecast. So I think we've had our break. To me, the risk is to the upside with all these Chinese sales happening. I would think that we should start to put some more weather premium into the market. What if we don't have 4 or 5 million acres of corn added on top of the intentions numbers? So I would start to think, I'm thinking that was the extent of the break that we were going to see in corn. And I wonder if it's going to be kind of an interesting growing season. I think there's upside potential there.
And I wanted to ask you, with the wheat tour going on and the big numbers coming out of that tour, do you think we are looking at a time where producers really should take a hard look at marketing some new crop or not?
I mean, 'tis the season, right? This is usually when we see cash pressure happening on that wheat market as we're going through the wheat tour and hearing really surprisingly good, very good yield for areas that we thought were really dramatically damaged by winter kill and so on and so forth. That's been a major wet blanket on the wheat market. So I do think this is a good time to make some sales. If you want to jump on the bullishness bandwagon of inflation and things like that, as we've talked about, cash sales for risk management, use the board for opportunity management, buying calls in Kansas City or Chicago wheat or Minneapolis wheat, give you more upside potential in case we turn around and rally again. But this is a great time to lock in some prices because let's be honest, these are still pretty darn good prices for wheat. They're not as good as they have been. So yes, you have to get over that mental hurdle. But if you look at where we're at, it's really not bad.
All right, Ted, we'll come back in a moment and we'll take a look at what's going on with our cattle and hogs and try and decipher what the market is trying to tell us right after this. Currently on the equity markets, I see we have a little bit of a lift going on in the Dow Jones Industrial Average. Let's take a look. Currently, it is up 156 points on the June futures. We're at 33,987. Had a relatively low jobless report this morning, so that gave the market a boost. The U.S. dollar index value is down today. We have June futures down 300 points at 89.885, so it does have that going on. Overall, that would be a beneficial thing for the ag trade. Crude oil, West Texas crude has June 45 cents lower at 62.91 per barrel after a high of 63.96. Now, on the live cattle trade, as we look at our futures, we have June down 85 cents at 116.05, August down 95, so a weaker start here today. Well, actually, we started a little bit higher and then failed right away. We have August feeders down $2 at 150.87. And lean hog trade, we now have that June contract 67 higher at 111.62. The others, August leading the way up $1.27. Just real quickly here, Ted, when you look at this overall livestock trade, are we able to reestablish some footing here in the hog market or not?
Yeah, I mean, look at the hogs look great. We were talking about it on Tuesday. You know, we had that reversal higher that day off of key support. The hogs look really good. That chart looks like a bull chart, similar to how beans looked back in November. There's more upside potential there. I've been targeting 112 to 114 in that August hog contract. I feel pretty good about that right now, especially with what we're doing here today. I'd like to see us hold on to the strength today. If we start to fail, that starts to raise some red flags. But for right now, things look really good. Touching really quickly on, you just ran through the outside markets. We've got, I'm not going to call it a risk on day here today, but it's less of a risk off day than what we've been seeing in a little while. So things are calming down, getting a little better. I'm disappointed that it hasn't translated to better prices for cattle. Feeder cattle seem to be thinking that, hey, the rally in corn or the break in corn is probably over. Corn held right where it should. It's having a nice little bounce. So it's a little disappointment for feeder cattle. The export sales for live cattle, marketing year high. But that can't get the cattle going. Yes, right out of the gate it did, but we can't hold on to the strength there. And that's concerning. But we realize that the cattle market is now very disassociated from what box beef prices are doing, from what exports are doing. It's really about what packers are willing to pay on the calf side of things. And for a number of reasons, they're holding back production. They say it's because workers, Right. Until that demand's there, it's hard to get the cattle market going higher. I wonder if we're just going to trade sideways because I think cash is just stuck in a rut.
Okay. Well, thanks for the analysis. Good stuff. Ted Seifried of Zaner Ag Hedge with us. A lot going on today. Janet, back to you.